Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway here at verifiedinvesting.com. All right, so we just had CPI data released. I want to go over those numbers. What's the market reaction? Also, what other stocks are making moves today? Because there are some. And then we have to also talk about the cycle action here. We're seeing the markets kind of rally today off the CPI data. But the question is, are we still going to see that cycle top coming over the next 1 month period? So let's get right into the action here. Let's go over to the big board and take a look at where things are. All right, so we're going to go over the CPI data first, but you can clearly see the markets reacted positively to this number today. Now, expectations were for 0.3 on the month-over-month number, so 0.3%. Okay, it came in exactly at 0.3. So why are the markets reacting positively? There's been this general feeling that it might be worse than expected. Inflation is starting to surge to the upside. In fact, it is worse, right? Now, you might say, well, wait a minute, but the number was actual was 0.3, forecast was 0.3, so it was in line with forecast. It was in line with what analysts and economists had said. But look at last month. This is the kicker, guys. Last month, we only had 0.2% inflation. So yes, it was in line with estimates, but inflation is actually starting to go back up. Last month, 0.2, this month, 0.3, and actual, again, 0.3. Now, year over year, came in line with estimates. Forecast 2.7, actual 2.7. So again, it was in line with forecast. So markets are rallying. Investors are like, whew, thank goodness. You know, it was in line with estimates. So we're just doing just like we are. Inflation will head back to 2%, just like the Fed says. Not so fast. Last month, year over year, 2.6. So we're marching towards 3% here. In fact, as long as we don't have a recession, I don't see how we don't get back to 3% on inflation in 2025. Because again, you just have too much money being created. You have too much money in terms of the Fed lowering rates. And again, think about that. Inflation, remember the whole the Fed saying, hey, we're going to get back to 2% inflation. That's our target on inflation. That's their target. Yet here we are creeping up from 2.6 to 2.7. And they're not only did they cut 50 basis points 2 meetings ago and last meeting 25, but they're going to cut next week 25 basis points again. But again, don't worry, guys. Our goal is 2% inflation, right? I mean, it's like a little silly in that respect. All right, either way, you guys get the gist here. Inflation is creeping up. Markets are happy it wasn't worse than expected. But again, don't be fooled by just the fact that it came in at forecast. We are still up from last month in terms of inflation. All right, you can see here on the S&P 500 a nice move to the upside. Now, granted, yet this up move is only negating the down move from yesterday at this point. Very clear, we have a level right here. That'll be a short-term intraday double top. That should be some resistance if we come into that level. But again, what we have to kind of decide here is what is going to happen with the bigger picture in terms of the big trend line on the S&P. And we talked about this yesterday, how we were starting to curl over. Is this the top, or are we still going to make one more attempt to touch that line? And I went into detail yesterday so you guys fully understood how upsloping trend lines don't have the same factor when you're hitting from below where it weakens the trend line. Because not only are you going up, you're getting more and more extended each time, which means this hit is just as big resistance as this hit, which is this hit and this hit. So they're all, because the trend line is getting more and more extended, that creates a scenario where this hit would be just as powerful resistance as here, 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 and even over here. Okay, so that's really, really important. And remember, that was in comparison to when you have a down-sloping trend line here. What's the difference here, guys? What's the difference? Okay, why, when it hits this down-sloping from below, is price eventually favored to break out? And again, gets weaker every time. And the answer is very simple. Because the stock or the crypto or the commodity is lower each time. It's cheaper, okay? Versus here, it's more expensive. And the more expensive means the more valuation is being stretched. And so it's a lot heavier resistance on an upslope. Here, it's cheaper. Cheaper value, cheaper value, cheaper value. At some point, if you have any value in that asset, it's going to break out. Because this line, where's this going to eventually go? It's going to go to zero, right? And eventually, if you have any value, eventually it has to break out. Versus here, valuation could just go up forever. I mean, this line, again, in a year, 2 years, 5 years, 10 years, this could be at 10,000 on the S&P. And at some point, valuation is ridiculous, even if it kind of is already. But nonetheless, you guys get my drift on that. All right, so Here we are today getting a little bounce. Remember, we have that cycle date coming up in about a week. But remember, as I've said to you guys, the cycle date doesn't mean that all of a sudden it's going to go, holy cow, look at that market drop. This is a cycle date where it's the beginnings of a change in character. That's what a cycle date is. It's where you go from this kind of psychological bullish mentality to more of investors starting to get more cautious, where buyers are a little bit more hesitant, the sellers are a little bit more aggressive, and as you curl over off of that level, as it comes down, it'll get more and more ferocious on the way down. But initially, you almost don't even necessarily notice anything. It's just more of a flatlining. So you'll see more of a chop where buyers and sellers are more meeting themselves, like we've seen on some of these large cap stocks. All right, so keep an eye on that, guys. Again, that is coming up very shortly. I'm still interested, by the way, in taking that big put position on the S&P. I've just been waiting, trying to hold out until the S&P hits that key trend line. Maybe it doesn't, but that's what I've been waiting for, is I want to time that options trade as well as I can. All right, looking at the chart of NVIDIA, guys. NVIDIA this morning, we are trading up a little bit, so it is bouncing. You can see this is the bounce pre-market on that CPI data. If we go back to the daily chart, though, this is where it gets problematic for NVIDIA. This line is now a potential breakdown. Now, what's fascinating about this, guys, is if we extend this out, what does this look like? Does this kind of look like the S&P, right? So if we go back to the S&P, look, this is over here. This is kind of where NVIDIA is right now. Now, in all fairness, NVIDIA could still make new all-time highs, but it's now below the trend line, which is a weakening of the trend. Even though the trend can continue, it's a weakening of the trend. And so here we are. We broke down, we've retraced, and sure, we could absolutely, in fact, let me grab up my arrow here. We could absolutely come back up here, but the idea is now you short into that. You look to short into that movement and look to see further downside at some point. Essentially, it's the beginning of the end for NVIDIA in terms of its bullish run once you get below these big trend lines here. And again, doesn't mean it can't make a new all-time high, but at some point it does end up rolling over. That's just what probability has taught us. Google. All right, Alphabet/Google, their new chip is absolutely amazing, supposedly, but it requires a ton of energy. So energy, again, guys, whether it's nuclear, these small nuclear reactors that they're looking to put into play, or it's other means, they're going to have to come up with a lot of new energy sources for all this AI and superconductor chip type stuff, and that's something to keep an eye on as other sides of investments. It's one of the reasons why I've been kind of eyeing a lot of these hydrogen fuel cell type things, because that's another angle of energy that kind of gets you away from, electric vehicles. Now, not that electric vehicles aren't great, they're fine, but unless you have solar on your house or there's other means of producing energy without gasoline, right? I mean, again, you have hydropower that can create it and other things, but a lot of times it's burning coal or gasoline that creates the electricity, which still is not totally zero neutral on the economy. So, hydrogen would be one of those aspects where you go towards, and I have heard that Elon Musk is talking about maybe switching his cars over or starting to produce hydrogen running cars. And again, very interesting angle there to think about for the future as well. Speaking of Tesla, let's go back to the chart on Tesla here. Tesla pre-market is up. Last I checked, yep, it's trading just under 410. The key level on Tesla has finally arrived. This is going to be a big level to watch. We have an upsloping trend line from the COVID lows right through these lows here, right through this high. You have your double top. They are converging right here at around 415, give or take. That's going to be a fascinating potential level of resistance to see how the price of Tesla works into that level. All right, this morning, Macy's here. Let's bring up Macy's there. We are seeing Macy's dump out. This company did warn this morning that their revenue was not looking so good for the quarter. Now, the kicker is this, right? So Macy's, guys, Macy's is kind of what I look at as a neutral retailer. It's not a super high-end retailer. It's not a super low-end retailer. It's kind of right in the middle. And so I'm paying more attention to this. It's not like, oh, this, only these $1,000 handbags, they're struggling, right? Okay, well, that you could say, okay, well, that's super high-end retail. Or, for instance, Dollar General has been struggling with buyers of their merchandise because it's like the super low end, which has been crushed by this inflation pressure. But Macy's is starting to get my attention in terms of its economic impact because it's in the middle of the road. It's kind of partially a little on the higher end and partially a little on the lower end, kind of in that middle group. So again, on an economic basis, let's watch to see if more of these kind of mid-level retailers start to give warnings on their revenue source is essentially consumer spending. Now, if we go to Macy's, it's currently trading at around $14.80. If we look at this, there's a gap fill here, but that's at $15.07, so that's already off the table. Price is below. If we look here, what do we see? We have a $14.54 or $14.50 double bottom, followed by a secondary one at around $14.20. So as a technical trader today, these are the two, this is the zone where I will start to be eyeing the Macy's for a potential technical bounce. All right, so $14.50 to basically $14. We get in that range, I will start to look at it with the Apex Live day trading room. Play, which is Dave & Buster's, also getting hammered on earnings yesterday closing. Looks like it closed around 37. It's trading at 32. If we go to our daily chart, by the way, these aren't big companies. I mean, Play is not a huge company, but again, trading at 32, it's down in this lower level. I would not mess with this 31.50 level. It's too small of a company, but if it gets down to about 29.30, right down here, this little double bottom, yeah. All right, guys, so we should be all right now. I apologize for the little sound interruption there, but we should be all back and all good to go. So we're looking at Stitch Fix right here, and Stitch Fix with a great move to the upside. Nice little push to the upside here, and again, good push. Big move up on a percentage basis. If we look at Stitch Fix is one that used to be a very pricey stock back in the day. Look at when I zoom out on this chart. Incredible move to the downside, and really it's been hovering in the lower ranges. Granted, it's had a big bounce from $2 to about $4.80, but today again, if we look at it, big move up to $5.80 on the charts. Now this is one where honestly there's so many shorts that you probably will not catch me shorting this. All right, you have to, as a trader, really be understanding. Now, I do see a resistance at around 890 up here, 887. But just to rehash here, as a technical trader, you have to really focus in on what the risk versus reward is, right? If you're going to short, let's say, a Stitch Fix, and you're going to say, hey, I'm going to make, let's say, 15, 20 cents, which percentage-wise is pretty big on a $5, $6 stock, but as a day trade, that would be fantastic. I mean, that would be amazing as a trade. But the kicker is, what if it can squeeze against you, and there's so many shorts, and it's such a low price, and it's beaten down so much on that bigger time frame that it could literally squeeze up, let's say, $1 on you? Does that make sense to take that risk? And the answer is, in this situation, in my humble opinion, it does not. So Stitch Fix, for me, I stay away from. Again, there's always a small chance that something could show up in the charts that would give me that risk reward that makes sense. But for the most part, don't mess with stocks that are heavily shorted, that are beaten down. Those are ones that can end up running 30, 40, 50, 60%. They could squeeze up 100%. I mean, think of GameStop. Think of some of these other players out there. Speaking of GameStop, it did report earnings after the bell yesterday. And what we can see here is it really chopped a lot in the after hours and then really is essentially mostly unchanged. All right, and so it's not doing a whole lot. It tells you that expectations were basically met. In terms of the chart, it's kind of gone to sleep. You can see a little bit of chop recently because of kind of the crypto buzz and the risk on. But I don't see anything on this that gets me excited. Obviously, Roaring Kitty tweeted about it not too long ago, had that pop up right here, and then it just kind of came right back in. And that's the problem, is that, you know, when you have these individuals that highlight the stock, it works for the few times to make big pops, but eventually the market and investors get immune, because when it keeps on happening, they're like, oh yeah, but last time it ran up 30% and dumped out, and then I lost money, for instance, so I don't want to take that risk again, or I'll just sell into it really quickly, and you start conditioning investors to dump into the pops instead of running and really squeezing the stock higher. So again, so that's all psychological, all psychological. All right, Bitcoin. Let's look at Bitcoin here. If we bring up Bitcoin, it is inching up just a little bit. So again, let's start from the basics here. On Bitcoin, you have a parallel channel. Okay, parallel channel short term. Notice how the last 2 days we hit, and bounced. Now again, as long as you stay within this parallel channel, the odds of moving up towards the high end of the channel, which is also this parallel here, right? This bigger parallel, these two lines, see the parallel channel right here and then this one up here. These are two parallel channels. They actually meet at where? 107 to 108,000. That is still your most probable outcome based on technical analysis. Doesn't mean it's going to happen, but remember, it's about a 75% chance that we are still headed to 107 to 108,000. Now, if we break the parallel, then all of a sudden this level comes into play, which basically is a flat top right here with this low, and we kissed it on that dump day right there. That's at around 91 to 92,000. Between these two lines, probability diminishes from 75% bullish to about 60% bullish. So it's still net bullish. You would still favor upside, but it's not as robustly bullish anymore. And the reason why I go over this, folks, is to understand most people, most of us investors, and again, this is me for years of investing, it was always like, oh, it's bullish no matter what. Right? That was really me in the first 3 years of trading and investing. It was like if I had a belief in something, it didn't matter. It was just like no matter what the chart does, I still think it's going up. Then you start getting to this point where you start to say, wait a minute, I see that when these things do change, it changes the probability, and you can back test this stuff, and we've done that thousands, if not hundreds of thousands of times here at Verified Investing to understand these changes in probability. And so going back to the chart, we can very clearly see that if you break in between here, yes, it still favors the upside since 91 to 92 is holding, but it's just not as bullish because you've broken the first channel. If at some point we break 91, odds flip then to being bearish, and you would favor a move down to 75. But right now, again, to be crystal clear, the odds still heavily favor a move up to 107 to 108,000. All right, next up, let's take a look at gold this morning on the back of the CPI data, and the CPI data is helping gold inch up. Remember, we closed outside of this bearish parallel bear flag. Now remember, this is the same thing. So let's go over these probabilities again. So this is, again, whether you're into gold or not, doesn't matter. This is educational to the T. All right, so when we were inside of this parallel, it favored the downside by about 75 to 80%. Once we closed above yesterday, it takes it down to 60%. Now, why isn't favoring a bullish move yet heavily? Because you haven't negated the wide range red bar. This bar is a stamp. It is a tree. It's a flagpole. To flip to a bullish probability, we need a daily close to negate the power of that red candle. So right now, you went from a 75-80% downside probability to about a 60% downside because you're still inside of the wide range red candle. And then if you close above here, which is around 27.15, 27.20, you would then flip it to probably starting to favor the upside back towards new all-time highs. Double top would be your level. And again, I go over this, guys, because it's a whole new way of investing, right? It's a way where you don't rely on emotion and just being like, oh, I'm always going to love gold, or I'm always going to love Bitcoin, or I'm always going to love Tesla, to much more of a finite, disciplined approach where it's all based on probability. And the reason why probability is important is it allows you to decipher how much money you should invest. When probabilities are high, you can invest a lot, right? Because it's you're winning 80% of the time. When it's 60%, you probably back that amount of money off a little bit. Now, you still may keep it in the trade, but also when it flips, do you exit the trade fully? Do you flip it around? And this is a way to manage your money like hedge funds manage their money. The best hedge funds in the world are always, they have computer programs now that are analyzing probability based on these factors that I'm revealing to you in this game plan. Super, super cool stuff. But again, it's the idea of bringing retail investors, which are honestly crapped on over and over again by institutions and bullied by institutions, where they're just constantly, pushing this narrative and getting you guys to kind of get more and more bullish, and then they're just dumping into you. I mean, there's a reason why markets were at all-time highs in 07, just before 08, 09, and a massive collapse where most investors lost 60, 70, 80% of their money, right? I mean, again, think about that. Now, some hedge funds got demolished as well, some banks did as well, but there were players out there that scored massively during those periods. So the idea is if you start to shift your mindset, you really start to become more premium in terms of your abilities and basically raising your game to compete with these institutions. All right, silver real quick. Let's take a look at silver here. If we go to silver, again, down ticking just a little bit. Notice how gold is up the last 2 days and silver is flat to negative. That tells me money is rotating to gold to be on the safe haven side versus industrial side is not seeing that type of move. So again, whether it's China, whether it's whatever, you're not seeing silver participate versus gold continues to go up. Silver is still stuck within this pattern, which means silver for now still favors the downside by about 75% probabilities. Okay, now again, the idea is maybe you come here, then you bounce, and eventually breaking down. If we get above here, same sort of thing. You would go more towards a slight negative bias versus a heavy negative bias based on where price closes. All right, lastly, again, let's touch base on oil here, and oil is upticking. I put in the short-term trend line because maybe, just maybe, we'll get a little price action on oil. If oil can break above 60, well, call it $70 a barrel, I actually think it could run as high as this trend line, which currently sits around 74. In which case I would be interested in shorting that if we got up to about $74 a barrel. And lastly, natural gas, guys, it hit off the trend line yesterday. This has actually turned out to be a fantastic trend line. Look at the hit here, bounce, then it skipped a day, hit it again, skipped a day, hit it again, and now starting to trade up. There's no trade here for me, but nonetheless, it is just interesting to watch how price has battled that trend line. All right, guys. So again, today we have the CPI data out, which came in line with expectations. While it shows an increase of inflation, it still was in line, and the markets are breathing a sigh of relief. It essentially locks in a 25 basis point cut by the Fed. I'm not saying I agree with that. I think it's lunacy to be cutting rates when you have an economy growing like ours is and inflation beginning to uptick. But the Fed is the Fed. They're going to do what they want, and it's our job to trade it accordingly as traders. I'll be back today at 3:55 for Trading the Close. We'll cover all the key trades of the day, the big setups, the big movers, crypto, stocks, commodities, you name it, we'll cover it. Have a great one, guys. I'll see you later. Take care.